This video was made for you, the curious beginner who's been wondering about the stock market. Maybe you've heard people talking about it, but it sounded like they were speaking a different language. No worries, that's what we're going to fix today. We were going to break down the stock market into easy-to-understand pieces, so you can see how it works and make sense of those numbers you see on the TV. So grab a cup of coffee and get ready for a fun ride. Because we gonna take you on a journey from Wall Street lingo to basic finance concepts. Remember, this is a safe space. Ask questions. Comment below. We're here to learn together. Now that we know the stock market is a place where people buy and sell tiny pieces of companies, let's dig a bit deeper into what that actually means. What is a share or a stock? Imagine a company like Apple. It's a huge business that makes iPhones, laptops, software, and tons of other cool stuff. But it started off small, with just a few employees and a big dream. As the company grew, it needed more money to expand. So it decided to split itself into smaller pieces and sell them to investors like you and me. Each piece is a share of stock, and when you buy one, you become a tiny owner of that company. Now you're probably thinking, great, but how much do I own? Well, it depends on how many shares you have. Say you buy 100 shares of Apple. You'll own 1/100th of the entire company. If someone else buys 200 shares, they'll own 2%, and so on. This way, companies can raise tons of money without having to rely on just one or two big investors. And regular folks like us can own a slice of these massive businesses. Pretty cool, right? But wait, there's more. Owning a share comes with some sweet perks. For example, you might get a say in who runs the company, major decisions, and even how much money they make. Plus, if the company does well, you might get paid in two ways. First, you could receive dividends, which are a portion of the company's profits that get split among shareholders. It's like a thank you for being an owner. And second, your share price might go up, which means you could sell your shares for more than you paid for them. That's called capital appreciation. However, here's the deal. Investing always carries some risk, and owning shares is no different. If the company faces challenges, its share price could drop, meaning you could lose money. That's why it's important to do your homework, understand the company, and be prepared for ups and downs. Owning shares isn't like holding onto your favorite comic book. It's more like planting a tree. You've got to water it with care, protect it from storms, and be patient because it takes time to grow and bear fruit. All right, now let's talk about how you can actually buy and sell these shares. It's super simple nowadays. All you need is a phone or a computer and a brokerage account. Think of this account like a wallet specifically designed for holding and trading shares. Once you open an account with a brokerage firm, you can deposit money and start browsing the stock market. It's kind of like walking into a grocery store. You look around, pick out the items you want, and head to the checkout. Except instead of groceries, you're buying shares. And instead of a checkout line, you're clicking a button on your screen. Easy peasy. And the best part? You don't need a fortune to begin. You can start with just a few dollars and buy fractions of shares. So if a share costs $200 and you only have $50 to spare, you can still own 1/4 of that share. Pretty cool, right? Now let's chat about how you can choose which shares to buy. It's essential to do your homework and research companies before investing your hard-earned cash. One way to get started is by checking out popular investment apps like Robinhood, Webull, or Stash. They provide user-friendly interfaces and tons of educational resources to help you navigate the market. And here's a pro tip for beginners. Don't spread yourself too thin. Instead of buying shares in lots of different companies, focus on a few solid options. Research their financials, management, and future prospects, and pick the ones that align with your investment goals. Okay, we know how to buy shares, but how do we actually make money from them? There are two main ways to earn cash in the stock market. First, you can sell shares for more than you bought them. It's called capital gains. Say you buy a share for $100 and it increases to $120. If you sell it at $120, you'll pocket a $20 profit. Now, if you hold onto your shares for more than a year, you'll pay long-term capital gains taxes, which are usually lower than your income tax rate. That's a nice perk for being a patient investor. The second way to make money is through dividends. Many companies distribute a portion of their profits to shareholders as rewards. And it's like receiving a thank you gift for being a shareholder. The amount and frequency of dividends vary, but it's a nice bonus on top of your capital gains. Some companies pay dividends quarterly, meaning you'll receive a payout every 3 months. Others pay monthly or annually. It's like getting a paycheck for being a shareholder. The cool thing about dividends is that you can either keep them in your account and buy more shares with them, or withdraw the cash to your bank account. The choice is yours. But here's a reality check for new investors. Making money in the stock market isn't a get-rich-quick scheme. It takes time, patience, and a bit of luck. It's just like in real life. Success doesn't happen overnight. So don't expect to become a millionaire in a few weeks. Instead, focus on investing wisely, diversifying your portfolio, and staying informed. Now let's talk about a common concern among beginners: risk. The truth is, all investments carry some level of risk, whether it's putting your money in a savings account, buying a house, or investing in stocks. But here's the thing: the stock market has historically been one of the best places to grow your wealth over time. Sure, prices go up and down in the short term, but in the long run, the market tends to move upwards. It's like riding a roller coaster. There are ups and downs, twists and turns, but overall, you're heading higher. To make things even safer, it's smart to diversify your investments instead of putting all your eggs in one basket. Spread your money across different companies, industries, and asset classes. That way, if one investment doesn't do well, it won't impact your entire portfolio. Plus, consider investing in index funds, which are like baskets containing shares from many different companies. By investing in index funds, you instantly diversify your portfolio and reduce risk. Remember, investing is a journey, not a sprint. Be patient, stay informed, and keep a long-term perspective. Now that you know the basics of the stock market, are you ready to take the next step? Are you excited to start investing and build your wealth? Or maybe you're still on the fence, feeling a bit unsure and hesitant. Whatever your thoughts, remember that every journey begins with a single step. And in the world of investing, that first step might just be opening a brokerage account. It's like taking the key to a new world where opportunities await. If you found this video helpful, don't forget to hit the thumbs up button. And if you're eager to learn more about personal finance and investing, consider subscribing to our channel. Thanks for joining us today. Till next time, happy investing.